Alright guys, good evening everyone and welcome to my stream tonight. Clear-cut analysis, this is what I would like to offer you tonight. Just simply also some thoughts of from my side, offering for discussions. Later on, if you like, a Q&A session where you can ask your questions, if there should be any. Also where you can maybe suggest stocks you'd like to look at, even cryptocurrencies. Let's see. Now let's jump right into it. And before we look at the charts, what I would like to start this stream with tonight is, first of all, looking at a quote that I came across and that I really liked a lot. So I thought, why not share it and talk about it a little bit. Don't know whether you've heard of James Clear, the author of Atomic Habits, before. If you haven't, I can only highly recommend this book. Absolutely outstanding read. I think I've read it twice. If you are into routines, if you want to improve your workflow, if you want to improve yourself, then this is what you want to have a look at. Anyways, what I read from him, or a quote that I came across from him, is you are the average of the 5 habits you repeat most, which obviously works nicely with what I just told you about his book Atomic Habits, because it is about just that, habits. Now, for me, or in my head, it became the following: you are the average of the 5 habits you repeat most or fail to do so. And now what is missing here, obviously, is you are the average, you are the trader. Sorry. My bad. Right guys, let's just pretend this never happened and let's do it one more time. As I said, James Clear, the author of Atomic Habits, great book. If you need to read something, then go ahead and read it. He said you are the average of the 5 habits you repeat most. What he means basically is that you are the sum of your habits, and they basically create your personality, right? So if you can figure out which habits you want to change into a personality, something you want to be or someone you want to be, then this is what you have to do. Repeat your habits over and over again. Now, in my head, this became the following: you are the trader of the 5 rules you follow the best. And again, I messed up. We need trader in here. You are the trader of the 5 rules you follow the best or fail to do so. And guys, this is crucial. Fail to do so. Because, I mean, it feels like a no-brainer, right? But honestly, it is quite easy to come up with 5 rules you definitely want to follow. The hard part then is, or this is where the problem starts, honestly, to also really follow through with them, right? As I said, a no-brainer, but be honest with yourself. Do you rather fail to follow your rules? Or can you really say, yes, I follow these 5 rules religiously and this is why I am successful? Just think about it. Some easy rules that popped up in my head when I was typing that a bit earlier on. Only trade with the trend. Only take trades in line with your written down rules. Go through your checklist before pressing buy or sell or putting in an order. Obviously, always have a stop loss. Always have predetermined targets. Never risk more than 1 or 2% of your account. I could go on and on and on. And obviously you could also go on and on and on. But just think about it. How often do you struggle with some of the ones that I've listed here, or any other rules for that matter. This is why I think pick and follow the right rules. Right rules is the emphasis here, right? Don't pick too many, but pick the right ones. And find out where are you really struggling to then really work on them. I just thought it would be nice to start off this stream with maybe some thought, food for thought. This is why, one more time, you are the trader of the 5 rules. You follow the best or fail to do so. So guys, what are the 5 rules that you follow or that you want to follow? Which are the rules that you, however, still struggle with? Comment below. Let's see whether we can start a discussion about this later on in the stream. But now, for the moment, let's really jump into the charts, because this is what we are mostly here for, I guess. And as you can see, again, something different from what you might have expected. The DXY dollar index and not the S&P here in front of you. The DXY overall gives us context, right? If the DXY goes up, then you can expect markets, then you can expect the stock markets in particular to go rather down, and the opposite. So if you are looking at the monthly chart here of the DXY, I would say we are in at a crucial crossroads, so to speak. Let me explain what I mean. I would say the next 2 weeks are really crucial. Why? Zooming in and looking at the monthly chart, it is quite obvious that if we close anything like what the candle of April looks like at the moment, we will have a clear continuation of the monthly downtrend on the DXY. Personally, I think this is exactly what is going to happen. But well, the monthly candle hasn't closed yet, right? However, another possibility obviously could be that we are spiking this low before then closing a lot higher, and then basically maybe even putting in a double bottom. Who knows? Definitely, if you want to be bullish on the DXY longer term, not talking about short term or mid term here, long term, then you need to break on a closing basis 105 points roughly. Otherwise, you could definitely maybe even see 99 points, 99.4 again, or a level that caught my eye when going through the chart here on the monthly. We have a massive fair value gap, and the 0.5, basically the middle of this monthly fair value gap, lies at around 100.38. So basically you're roughly lining up with these highs here. So I think we could definitely trade down to 100.38 points still. Throwing on our monthly boxes, we see that really the bullish, long-term, big-time bullish target box only starts at 98.35. How long is it gonna take us to get down there, if we ever get down there? No one knows. But we have confluence here again in the form of a monthly fair value gap. In other words, we went up, we took liquidity, we closed in this monthly fair value gap, and it seems right now that we are continuing this long-term monthly downtrend on the DXY. And then that obviously long-term would definitely be bullish for the stock market. Zooming in and looking at the weekly chart then, what do we see? We did break the weekly trend here. However, now we see that this was basically just a fake out, right? The weekly downtrend definitely has continued. Now you would rather say this all was a massive shakeout, fake out to the upside, as we've closed below 101.93. Throwing on our weekly levels. This is the level quite in line with the monthly level that we talked about before, that we now want to beat to be able to say the weekly downtrend has been broken and we are in a weekly uptrend again. We are attacking, or we have attacked, weekly liquidity on Friday, or last week. Actually, I don't know whether it was on Friday. I think no. And we are in the middle of this monthly fair value gap. Throwing on my weekly boxes, we see that we've also, for the second time, tapped this weekly fair value gap. Hence, probably also the reaction from there. So overall, again, on the weekly chart as well, the downtrend on the DXY seems to be confirmed. Finally, let's also zoom into the daily to get real context that we can then use for trading stocks or looking at the stock market. And what do we see here? For the daily trend to shift, we would need to break the level of around 102.55, lining up nicely with this weekly fair value gap here. We have just filled in this gap on the daily. Looking at our Fib retracements, throwing on our daily boxes, we also see that we might push up a bit further before then continuing further down. At least this is what it seems like at the moment. Finally, if I look at my cheat sheet, the ones who've watched my videos before know what I'm talking about. We see that we have very low volatility. What I like to do with respect to volatility is that I draw a potential range, and should we be able to really reclaim and hold this range, then this could potentially be considered a fake out, and then we could work our way maybe further up even to this weekly target box again before pulling back one more time. Hold on one more moment and then you'll see why I'm showing you all of this, because I see the confluence between the DXY, the correlation between the DXY and the S&P 500, the stock market. This is why it's always good to have these developments, moves at the back of your head. Right, no messages, no to the S&P 500, and keep exactly that in mind, that we are looking at a potential bounce. Also, if you look at other areas where other moments in time where you were looking at very low volatility, you very often have exactly what I was just describing, a fake out and then the real move. Same here, fake out, real move. Same here, fake out, real move, right? So potentially we are looking at a fake out before the real move, and that then obviously for the S&P would mean, if we could really move further up on the DXY, potential for a stronger pullback. Switching to the chart of the S&P 500 and zooming out again one more time to the monthly downtrend. I don't know who of you has watched my recent videos where I claimed that yes, the lows for the S&P 500 are definitely in. I can only highly recommend you watch it. Link, I'll put it later on into the description, or otherwise you can find the video obviously on my channel page. But just in short, for everyone to understand, let me throw on the monthly levels, and then it will become easy for me to explain the gist in a couple of words. In general, you find a 100% hit rate, at least since 1998, in the 11 occasions that followed before this time, in which a new monthly uptrend basically meant that the lows longer term really were in for months or even years to come. And this is exactly what we see here. The long-term downtrend officially now has been broken with the close of the candle of March. Yes, it is a very close call, but zooming in, it nonetheless is true. The candle of July 22 closed at a price of 4,133.5, while the candle of March closed at 4,137.75, so slightly higher, and we seem to be pushing up further. However, such a trend shift obviously doesn't come without the potential nasty pullback. Yeah. But that just for everyone who hasn't seen the video yet. In short, go watch it and let me know what you think about it. Now, looking at the monthly chart, it is quite clear that indeed we did break the monthly trend to the upside, throwing on our monthly target boxes. However, we see that we are entering an area of heavy resistance, this being our target box from this last leg down. We're just entering it. Also keep in mind there is monthly liquidity resting above us at the level starting over at around 4,208, 210. And at the same time, a lot more interesting for us as the trend is bullish. Should we pull back, where could you expect to find a potentially massive long opportunity for the longer term, starting at around 3,800. A lot of lows that really haven't been attacked yet. Makes me be a bit cautious. All of this liquidity resting underneath the monthly low of December, monthly low of January, monthly low of March. It's not going to be attacked. I'm not too sure. And obviously this would then work nicely with what we've just said about the DXY. But for the moment, let's zoom in into the weekly to get a better perspective. Interesting enough, on the weekly, the bigger term downtrend hasn't been broken yet. Nonetheless, we are in a clear monthly uptrend. But again, we are approaching heavy resistance, weekly and monthly liquidity resting above 4,210. Monthly target boxes, weekly target box as well, a fair value gap or gap opening in general that hasn't been closed yet and goes all the way up to 4,230. More liquidity even resting above 4,330 with a massive weekly fair value gap. The bullish or first bullish target box lining up nicely with this weekly fair value gap we find at the level of around $4,000, and this is what I personally would be interested in. Should we be able to pull back down to this target box, I would take a trade. Actually, the trade is already set. I'll show you in a moment. I'll explain my reasoning as well. So you can see the weekly really is in line with the monthly here. Only difference, the weekly longer term downtrend hasn't been broken yet. Nonetheless, the statistics tell us that if you start a monthly uptrend, you are in a new longer term uptrend. So what do I see happening? I expect really one more push up and then a pullback. How deep is everybody's guess. We don't have a crystal ball, no one of us, but personally I see it playing out like this if I had to make a guess. Finally, for the longer term, looking at the daily chart, where, when and how could you take action? Let's get rid of the weekly and monthly levels at the moment. This, for me personally, is always very helpful to not clutter my chart too much. If I had to just trade one time frame, I would potentially pick the daily chart. So let's have a look. The daily chart is in a clear uptrend. However, for this uptrend to continue, we would need to, on a closing basis, take out this level at around $4,192. And interestingly enough, we talked about these levels several times. There's a lot of daily liquidity resting as well. And the gap opening on the weekly, obviously you find it on the daily as well, lining up nicely with a daily bearish target box. Personally, in the short term, I see this liquidity being taken out potentially over the next week, filling in some of this daily fair value gap, and then either pushing up from there, or if we go for the upside first, then potentially pulling back deeper into one of these daily target boxes. Especially if we, on a closing basis, break this aggressive daily higher low at around 4,112, I see us going for any of these two target boxes. How did I come up with them? If you take this swing point, then you see you come out at around 4,047. If you take the fib protection from down there, you end up with 3,996. Now, if you really want to determine the strengths of levels, if you really want to be able to, because you're working full time as I am, put in trades with some confidence, what I like to do, this might look cluttering now, but what I like to do is throw on all of my levels and then use this to determine why I would want to take a trade. Let's get started with a potential short trade. Throwing on then my daily levels for starters. You see, and I've already put in this trade, you see why I would go for it. Potentially, I see a rejection here from our daily target box, filling in this daily fair value gap, taking daily liquidity. Can I find more confluences? Yes, I can. If I throw on our weekly boxes, we are already playing with this weekly bearish target box. Nonetheless, we've set it on the daily, same on the weekly. I would like this gap to be filled. And even on the monthly, we would still have the chance to go all the way up to this potential break of the weekly downtrend and reject there. And with the monthly, same story. It would be a rejection within the monthly target box and taking out monthly, daily, weekly liquidity. This is why personally I see this trade potentially playing out. Obviously you can get stopped out, but there's a lot of confluence here, and if we don't reject from this area, I see us going up to potentially 4,320 or 30 even, taking out the monthly liquidity, resting there, and entering this weekly fair value gap. Same story with respect to long trades. Very short term, I see us going for the liquidity underneath 4,095, but potentially I would be most interested in this level of around 3,995 because of all the confluence you see here. Monthly level, weekly fair value gap, weekly and daily target box. So daily liquidity, so a lot of confluence factors that would make me confident enough to take a trade there. And let me remind you one more time of what we talked about on the DXY. Potential deviation below this range. We could go for a push up in the DXY, and if this holds true and the correlation is there, have a look for yourself, then you might see one more push up and then pull back. Maybe we have already seen the high, no one knows. Are there any questions in the chat? Then let me know. Then let me maybe finally give you one more advice or one more personal hack that I use to be able to determine more easily whether I want to take a trade or not. For that, I will get rid of all these lines again and throw on my cheat sheet. And what do we see? Just like we talked about in the DXY, potential for a volatility, for a deviation of the range happens often. The momentum is at its highs, might be diverging on its own. Divergence in an indicator doesn't mean anything. However, we have low volatility. Low volatility often precedes a fake out. What we do know is that low volatility follows an expansion of volatility, thus obviously aggressive moves. But if you have a closer look, this often correlates with a fake out. So push up, then the real move before potential continuation up. This is how I see it. Hopefully you've learned something so far. If you have, then like, subscribe to the channel. Let me know what you think about it. What is your trading style? Always happy to hear from people. I would like this to become a real community of like-minded traders, learning from each other, inspiring each other. So help me out here. Help the YouTube algorithm, as they always say. And with that being said, let's just simply move on to what is probably a lot more interesting for most of us than the algorithm, the NQ NASDAQ. Same story. Looking at the NASDAQ on a higher time frame, the monthly. This is why here I said long-term downtrend, aggressive approach. Obviously, you could also say that we've only just broken this monthly downtrend with the candle of March. The result is the same. We definitely are in a new monthly uptrend. However, don't be too bullish, because there is a lot of liquidity resting above 13,700, and this is potentially where I see us going. Throwing on our boxes, we see that we are getting closer and closer to a monthly bearish target box. And for bullish retracements, there is monthly liquidity resting underneath 11,808, and this is lining up nicely with a monthly bullish target box. Just like I said with the S&P, should we get down to these levels, I see it as a gift. Now, making an analogy to the S&P again, yes, you also have a lot of liquidity resting underneath these monthly candles. So the doomers and gloomers might want us to go down there. They could be right. Who knows? Maybe we are still in a range. However, I stick to what the charts tell me. The charts tell me that in over 80% of the cases, if you are in a monthly uptrend on the NASDAQ, the lows are in. So zooming into the weekly, and throwing on our weekly chart, our weekly levels, we see that as long as we don't fail on a weekly closing basis, the level of 11,960, the weekly uptrend definitely is intact. However, especially from an investment perspective, don't be too aggressive with buying in right now, because we are also approaching massive resistance. We have just rejected from this weekly fair value gap, found support so far on this monthly level. I see us going a bit higher, just like with the S&P 500. What would be my trade for the NASDAQ? Midterm, I would like us to revisit the level of around 12,500, filling in this weekly fair value gap, entering our bullish target box. And then with respect to shorting, potentially going for this level of around 13,700, maybe even 13,800. Let's frame that a bit better with zooming into the daily chart. Same game as before. For the moment, let's get rid of the higher time frame levels. get a better feeling for what we're looking at on the daily chart. Last week, we have interacted with this daily target box starting at around 12,940. We have pushed up. Now the question is, are we going to go for liquidity above us first of all, or will we pull back further? Definitely, this is where I would want to take a trade on the very short-term basis. If I was in front of my charts, yeah, I think I would want to be on rather cautious here. Either we pull back to this level of around 12,500, or I want us to go up more first of all, and then potentially take a trade in the area as I've described of around 12,700 to 12,800. Why? Because I would like us to take out some of this monthly liquidity before pulling back. So my play is this, should it come, obviously. Finally, trying to frame it in an more actionable way, relying again on my cheat sheet here. What makes me think that potentially we have one more push up? First of all, momentum is not what I like to see with respect to taking a short position. And secondly, we are in a period of low volatility, and in such periods I always like the highs or lows of a potential range to be taken out, and that then means that either I would like to see a deviation above this range or below this range. And where does that leave us? Exactly in the areas of interest that we've just outlined together. This is basically what, anyways, technical analysis is all about for me, right? Technical analysis cannot tell you what definitely is going to happen. It can just heighten your chances of being right in taking a trade by finding confluence factors. And this is exactly what we've done here tonight. We first of all have had a closer look at the DXY. Why the DXY? I don't personally trade the DXY, but I do know the correlations, very close correlations between the dollar index and the stock markets. And here potentially we've seen at least a local double bottom. Doesn't mean that we can't go further down, but for the moment, for me, it's more likely we've taken liquidity here, that we push up on the dollar, and then that obviously means that on the S&P you might get one more push up, but potentially you will fill in some of this price range, and on the NASDAQ, same story. And now if this even lines up with what indicators hint at, then I think you have a strong case if you add in different levels, fair value gaps, and so on and so forth. Yeah, I really want to keep the stream rather short here tonight, but hopefully you have learned something, or hopefully going through the different charts here has been helpful to you. If so, then don't forget to leave a like and subscribe to Market Structure Break. and then hopefully we see each other soon again in the next in the next stream or in